Now, we're going to talk about how to enter a trade. And I don't want to be dismissive of this because it's, you know, if you're learning to trade, you are taught by the trading industry that there is, you know, the entry is it's all about entering the trade, the special place, the special setup to enter the trade. And it can get really intricate. But if you, as you progress and as you work with this, some of the stuff is going to go away. And I promise you, I don't mean to be dismissive or dogmatic when I say this, but the trade entry is actually the least important part of the trading process. And when I say trade entry, I'm not talking, the trade location is the most important part. But I'm talking about the exact triggering of, you know, I've decided, all right, the market's where I want to be selling. Well, the exact tick is not important. And some of it gets down to personality, you know, how you enter a trade. This is a great quote from Mark Douglas that sort of addresses the trade entry thing. Most people like to think of themselves as risk takers, but what they really want is a guaranteed outcome with some momentary suspense to make them feel as if the outcome had been in doubt. And this is why, you know, you can find yourself getting anxious when you sit there all day long. You wait, your trade sets up, you enter the trade, and then what does it do? It sits there. It goes into a narrow range. Okay, so the entering trade process is really here. Identify the opportunity. So I'm going to sit down tonight. I'm going to look through half a dozen contracts, 6 or 50 if you know if that floats your boat. But if you find 5 or 6 contracts, that's plenty. If you have 5 or 6 contracts that you really analyze every night, you should have a trade setup or two, you know, almost every day. Certainly no less than every other day. And then you decide what the setup is, and the setup is if the market trades into that trade location, and you click buy or sell. That's how you enter trades. Now I'm gonna show you expound on that a little bit, okay? All right. Okay, so let's say we came into today and we had a bearish bias, which I had. And the market is trading, and it's trading in this balance area here. Now, there are a couple ways I can enter a short position. I can just enter it short here. Now, if I enter it here, my stop has to be here. And my expectation is, at this point, my expectation is to here or below. So now this sort of gives me my eyeball reward to risk. I can look at this and see this is probably, I don't know, close to 3 to 1. Let's see. Yeah, close. So that's a trade I can eyeball and see that that's an acceptable trade to take. Now, the other way I can enter the trade is I can say, well, you know, you've got a situation here where we tested these lows. Globex has tested these highs. We have a little balance forming here. And there's a little bit of a lean as we're coming into the day session against this midpoint. So I want to be a little more careful, and I'm going to sell it on a stop below the low of this structure. Now this will keep me, if I enter trades like this, it will keep me out of situations like this. And what I give up in return is I don't get as good a trade location. But if you are consistently, if you find yourself consistently picking, if you have a savant ability to pick the wrong side of the market and the right trade location, then enter trades this way. Here's your solution. Let the market put you into the trade. And you can always go down to a 5-minute chart and fine-tune the process. Now, if you want to know how I enter trades, if I think this market is going lower, I sell it. If I think it's going higher, I buy it. And if you ask me where, I'm going to tell you somewhere in here. It depends on where I see it. As soon as I see it and make a decision, I'm in. Now, I actually bought this today, by the way. And Bob Mosier did too, who's in the room. But it's perfectly acceptable to let the market put you into trades. Troy, you form an opinion and get in, don't you? You're not looking, what do you use anything in particular to trigger your trades? You sort of have my entry technique. I think it's going lower because of this and I'm in. I think that's how most of us with experience tend to evolve. We just sort of say, okay, here's the trade, has a positive expectancy, I'm in. And this is another one of the liberating aspects of trading this methodology is that you don't have to obsess over all this nonsensical minutia about how to enter a trade. This has more to do with go ahead, appeasing your personality psychological needs than it does adding any sort of expectancy to the outcome over a series of trades. And I don't mean that dismissively. For now, do what's comfortable for you. And it's, if you want to enter on a stop, let the market put you into the trade, there are benefits to that. You will avoid situations where you just pick the wrong side of the market. And trust me, I will pick the wrong side of the market. I do it all the time. But sometimes I get it right too. So. Yeah, James, you say now my bias was short at the opening or coming into the opening until I saw this begin to form. I mean, this was right at, actually I entered before 9:30. I entered in here because this thing was holding up. And I was watching, if you looked at, the other thing that got me a little bit that I noticed is that the Russell had sold off in Globex pretty deeply. And then it was showing some strength in here as we came into the day session. But now, on the other hand, James, if I had been stopped out of that trade, I would not have hesitated to, I probably wouldn't have stopped in reverse because I probably stop in reverse 3 times a year. It's just something I just generally don't do. I do occasionally do it. But I would not have hesitated to then turn around and look to get into that short position. Because I was, everything objective up to the point in time of right before this market opened looked like we were indeed going to test or take out those lows, and that was my bias. But when the market opened, baby, it was it was pretty clear pretty quickly that you didn't want to be fading that range, that market. Robert, you say, what about the balance area? Hey, John Ockney, did I answer your question? I didn't see it. I think I answered it. Okay. Robert, what's your question about price out of balance area? Okay. Well, do you guys want me to go back through why I went long there? Is there anybody that didn't cover that? There seem to be some questions about that. Now, this is, more about entering. Don't expect a perfect entry. This methodology is not about the perfect entry. It's there's no such thing. And if you obsess over ticks, you're going to miss some great opportunities. And it's another difference between us and everybody else out there. The prop shops in Chicago are almost extinct now because this was a legacy of the prop shop thing. The prop shops evolved from people coming off the floor, and they knew one way to trade, and they brought it off the floor, and it worked, and then it blew up because there was an edge there if you were really good and really fast. And anytime there's an edge like that, if you can program it, it will go away. So the high-frequency traders took that game over.